guys and gals. This is Blake Morrow. You are listening to the Morning Edge webinar, and you can see the cable slip below 154. Again, I want to give Paulie some kudos there. He really nailed it at the high end of the 154. Look at the reversal, 154.45. Paulie, you around? Well, if he's around, good job. Great job.
Yeah, Blake, I'm here.
Hey,
Thanks for the congratulations.
good call, Paul. Good call. Now I'm gonna sell rallies from here. So very nice stuff.
Okay,
All right,
thanks a
bud.
lot.
All right, bud. Okay, so what we're gonna do is we're gonna get ready for today. We've obviously got a lot of news, a lot of volatility. You can see equities have reversed pretty quickly. So we need to stay on top of this right now and see how you know see how things develop. But we gotta get ready for today. So, I think one of the things that I want to point out specifically is the euro dollar's failure to hold above 112. But let me go grab our bias chart first before we do this. And why? Oh, why? There we go. Okay. Let me make sure I save that. There we go. Okay. So let's first and foremost, let's go over to the euro dollar. So the euro dollar rallied to the 112. We've had it written as 112.30 resistance, 112.35. This is a 24% retracement. Okay, that's all it is. It's just a 24% retracement. The scary thing is we cannot scale above that resistance at all, and that to me is a little concerning. I mean, if you're long the euro dollar, you've got to be extremely extremely um, um, excuse me. Uh, you got to be extremely concerned right now that we're not able to scale above that resistance. All right, and that to me is it's telling that the dollar's got a really strong bid in it. People are probably thinking that the dollar could, indeed see some sort of buying following the FOMC meeting next week. Now, if you think about it, the FOMC, they're going to be raising rates more than likely, and if they don't raise rates next week, then we're inching closer to the day that they do. So even if and again, most traders don't expect a rate rise next week. Okay, they don't expect a rate rise next week. So with that being said, we are in a situation where if they do, it's obviously going to surprise the market. But even if they don't, the dollars, could catch a bid regardless. As traders start to plan for a rate hike here in the next couple of months. Remember, the market is a future pricing mechanism anyway. So if they don't raise rates, what that suggests to me is any rally that we see following the rate decision, I'm just going to sell in the strength. So even if the euro rallies to 113, like let's say next Thursday, next Friday, I'll sell at those levels then. You know what I mean? But like I said, I'm trying to, like I've said, the last couple of weeks, I'm trying to get myself into a dollar long position ahead of the FOMC. I just don't know if I'm going to be able to do it. But what I will be looking for today is a move above 112. Well, now the highs, we have to mark up the highs at 112.44. That's key resistance. If we can get above 112.45, if we can get above there, then we can automatically target 113.30. Which, like I said, if we can get up there, I'm looking for a sale up there if I can get it. I just don't know if we're going to be able to get it. One of the things that can happen too, I want to also mention that if the stock market comes under pressure, which obviously it is right now, we're giving up all these recent gains. If you look at, you look at the the Dow futures were up 150 points at one point. Now we're only up 2 points. If we go negative today, the dollar yen could sell off. And if the dollar yen sells off, that might provoke, like it did yesterday, it might provoke some dollar weakness, which got the euro above 112. Maybe today, if the dollar yen falls, it could push the euro dollar towards that 112, 50, maybe 113 level. So it's still possible. That's why I don't want to run out and just start shorting the euro at this moment. Okay, I'm kind of standing aside and hoping that it rallies a little bit. Support obviously is still down at 111, but even today, you look at this 111.30. I think there's going to be buyers down there. I mean, if you look at from the low, the spike low, or the double bottom low, whatever you want to look at it, the range low as far as I'm concerned, to the highs, right? A move down to 1150 is going to be the 618. Below there at 111.30 is going to offer support. So maybe a move down to 111.50 would be really good support. Right now we're being supported at the 50% retracement, but for those of you that are aching to buy the euro dollar, maybe you might wait for 111.50 to be a buyer. It's not great support. Obviously, really great support's down at 111, but being able to buy it down at 111.50 might give you an opportunity to go long for those of you that want to play that side of the market. Again, I'm a dollar bull, so I'd rather be on the short side of the euro, but there are obviously many of you dollar bears out there, which in your own right, we are in a range environment right now, in a very big range environment. So you can trade both sides of the euro. Just because I happen to be bullish the euro doesn't mean that I'm always going to be, or excuse me, bullish the dollar doesn't mean I'm always going to be short the euro. I mean, I think I played the euro to the long side at one point last week. See, I do it every once in a while. Now I can't remember doing it, and I try and I try to block those memories out of my mind. I went long the euro. Yeah, I don't remember doing that. Just kidding. But this damn pound's not going to get much of a lift. I was hoping to get it back at 154.20, but look at this thing. It's sold off, bounced back to just above 154 and slumped again. So I'm still looking for a move, maybe back up to 154.20 if I can get it. But speaking of the cable, let's talk about it. So obviously, based on Paul's analysis, sorry, a couple things that there we go. Late night at the launch party. This here was a really interesting move because as I pointed out when Paul was here, that we were hitting new highs. Remember when I stepped on here, we were hitting new highs. Relative strength is diverging. Do you see how relative strength is diverging here? See how it's going down? Price is going up. Relative strength is going down. That was a good indication that it was going to reverse. It was just finding that right point for it to reverse at, and Paul nailed it. Now, I still think that, you can see the low here was 154.51. Okay. The high today is 154.47. So 154.50 is obviously key resistance today. If we rally back to 154 and change, that is your risk. Okay. So in other words, if you short the cable, like let's say it gets up to 154.25, which, might do it this morning, and I might take a pop shot at it when it gets up there. If the cable gets to 154.25, I'd be shorting the cable with stops above like 154.60. Yeah, that's how I would approach it. Okay. Now, we don't obviously, you have to also, consider the fact that if we break above this resistance, we should see 155 relatively quickly. So unless you plan on sticking around for all of that, you gotta keep your risk relatively tight. But it's a good risk reward if we can get back up above, into the 154.20 level. I think, because you notice how we're holding down here. So if we have this hourly candle, holds below here, let's say we close, let's just say for argument's sake, in the next 20 minutes we close down at these prices. That's good, because then that means it was a failed breakout attempt. Now that means that any rally in the next hour will be a good selling opportunity, in my opinion. All right, now support for the cable. So this is the hourly chart, and you can see support is obviously very, very crucial through here. Let me remove this line because I don't know where it comes from and why. But what I will write down now is you got this support here, right? And you got that resistance right there. This is all about the same price. So I would give any dip credit. Oops, I didn't mean to grab the whole thing. I would, even if we hit to new lows here, like let's say we just reversed to new lows, you still got to be very careful about that support that comes through here, right? So that resistance is 153.20. That's going to be support today, especially if we get a reversal. All right, we're in a range environment there too. Okay, the Swissy. Now the Swissy has pulled back. Obviously, the Swissy the Swissy has pulled back from that 98.50, which is really, really critical. I'm still holding out for a move in the Swissy, down to like, maybe 97. My expectations are getting worse and worse and worse. If you recall from last week, I'm like, okay, last week I'm like, if we can just dip to 94 or 94.50, I'm going to get long. Then we break out again. I'm like, okay, if we can just dip back to 96. And it just keeps ripping higher. Now I'm like, okay, if it can just dip down to 97, I just want to buy it on a dip. We just haven't had an opportunity to buy it on a dip. So, um, uh, again, the 97, this might be, the opportunity that we're looking for if we can get a move back down to 97, maybe even below that. So this 96, how about even, I'll even give it a little bit more down to these spike lows at 96.80. And you have to imagine if stocks come unglued, the dollar Swiss could come down. So 0.9680 could be support. Okay, I would think would be really key support. I'd be willing to put in a bid. Matter of fact, I will. How about that? I'm that crazy that I'm going to put in a bid at 96.90 because I want to get in before you get in, right? And if you're going to get in at 96.80, then I want to get at 96.90. See, it's me before you, except I'm telling you where my bid is, but you get the drift. That's what traders do. It's like, okay, if I know everybody's buying here, then I'm going to put my bid in right here, and then you're going to have the other person going, okay, if that person's going to put their bid in here, and then the other person's going to try to outsmart them and put their bid in here, I'm going to put in my bid at 97. That's how you end up having a layer of bids, because everybody's trying to get in a better price than each other. I put in my bid at 196.90. So, if we get down there and I get tagged, so be it. I want to be long down there. I've been wanting to be long down there. I'll get long down there. I'll be happy I got long down there, hopefully. Then we'll go from there. Okay. Resistance. Obviously, 98.20 is resistance. Now, I will say this again, and I will reiterate, I don't think we're going to break out ahead of the FOMC. If we do, I'm going to be really, really ticked off that we did. I am. I'm going to be extremely irritated that we break out pre-FOMC. But, 92.20 to 92.50 is major, major resistance. So, or 98.20 to 98.50. 98.50, major, major, major resistance. Okay. And we're in a range environment, but man, we are threatening to go mega bullish in the Swiss pairs, and especially the dollar Swiss, threatening, because when or if, and let me get rid of these yellow. I'm going to get rid of this yellow channel for now. When or if we break that weekly, monthly, multi-decade trend line, this thing can go parabolic, and I want to be around for the fireworks if it happens. I do. Man, Dow futures have gone negative. We're down 13 points in the Dow futures now. Oh my God. Becky, look at her butt. Just kidding. It's an old song. All right, Swissy, let's go over to the yen. Here's the dollar yen. Again, what's so surprising to me about the dollar yen is, and I'm my cost average short is at 120.90. I mean, I'm out of the money 24 pips right now. What's so surprising to me is the bid in the dollar yen, despite the weakness that we're seeing in equities. A lot of that has to do with the BOJ comments over the last 48 hours. So, obviously, if the BOJ would just shut their yap, it'd be great. The yen could actually strengthen. We could see a move down here. But the reason why the dollar yen is so firm right now is the BOJ is really, verbally talking down, um, you know, talking down the yen. Okay, we are at the 786 retracement, still struggling around this resistance. We could indeed move up towards the 121.75 resistance. I've got to put it up there because, like I said, it's been relentlessly strong. If the stock market turns around and buyers come in right now, and the Dow goes up 100 points, the dollar yen is going to hit new highs. I can't guarantee you anything, but I'm pretty confident that that would happen. All right, I'm saying that being short. All right, so it's not a good feeling that if equity markets decide they want to do a U-turn here and Dow futures is down 23 points, we go up 100, we're probably going to go whoop right into highs. All right. Now support for the dollar yen. I mean, yeah, last night I was happy. Last night we were right here before I went to bed. I'm like, oh look, we sold off to 120. We bounced back to 120.50. I'm like, this is great. We're gonna bounce a little bit and roll right back over. Yeah, I didn't expect us to scream into new highs. I just didn't. Relative strength is diverging as we hit new highs, though. That's something to note. Um, I don't even know where support's going to be today. I mean, I can write down 120, but that's like, here's the BOJ comments. I must have missed that. I must have went to bed just as those comments came out. So, all right. So I guess support is, maybe this hourly support here. I have to assume that we hit new highs, or we are, excuse me, I have to assume that those highs have been, those are solid now. I mean, so if that high sticks, 120.50 is going to be support today. But that's an if. So I have to write this down as it's not great support. It's just support. Let's go over the Canadian. Now, the Canadian, the only Canadian exposure I have right now is the Aussie Canadian. I bought the dollar Canadian yesterday, just so you all know. I bought it at like 131.80 when we dipped down to right here. We broke through this channel support, and I said, "Oh, that's a false breakdown." So I bought it at 131.80, and I sold it at 131.80, and I sold at 132.10. Obviously, I got out a little early. I'm just telling you how I traded it. I bought it here after it dipped, did a false breakdown. I'm like, oh, that was a juke play. I didn't know it was until after we popped right back above the 70 level, and I'm like, that was a false breakdown. So I got long, then I got out, like right here. Like I got out like 132.12 or 15 or 10, somewhere right here. So I made like a quick 35 pips. Obviously, I didn't stick around for the entire party. I just, got in and out. But what I did at the same time, when that happened, I sold the Canadian yen at 92.06, I think is the price I got. I sold at 92.06. I mean, I'm talking, or maybe it was 92.02. It was like I cherry picked that high. I really did. And I sat in that trade all the way until yesterday afternoon, and I got out somewhere down here, like at 100 and some odd pips. Phenomenal. It was a great trade. I'm not in it anymore though. I sold it up there yesterday. You remember, I drew this out yesterday. I said if we spike up to 92, up to the 786 retracement, that's going to be a good short. I drew it out for you guys. We just exceeded it a little bit after the BOC. Okay. Now, I'm not in it anymore. I'm not trading it. My only position right now on the Canadian pairs is the Aussie Canadian, which I'm long, and I'm up 46 pips now. Okay. But I do want to tell you guys, oh my God, stupid cable. Damn it, pound. Um, I'm gonna throw you out the window. This is the whole reason why I want to do a discus toss with my laptop, hopefully this weekend, is because the cable's just not going to participate with me. It's not. No. Okay. Anyway, so with the Canadian though, you go back to the Canadian. What's going to provoke me to buy everything Canadian is that you guys know this, and I know I don't have to say this a lot. If we break this 133.20, especially with that little false dip below the channel yesterday, okay, see that nice little hammer, nice hammer on the daily chart. We break above 133.25, and we're gonna bust out to 135. Okay, when or if that happens, I'm pretty much gonna buy every Canadian pair: pound Canadian, euro Canadian. I can't trade the New Zealand Canadian, but might buy the dollar Canadian. I'm gonna be doing a lot of Canadian work, if you will. Um, Obviously, we have a lot of work to do here before that can happen, but okay. Resistance today, 132.90 for today. 1.3290. And one of the things you also have to consider is crude oil still looks pretty weak. I mean, every bounce that we're seeing, crude just gets sold. Okay. All right. And we're still in a bullish trend. Support obviously now is at 131.90. Okay, when I get back, whoops, this is bearish. Oh, I know it's been holding up well, but still it's in a bearish trend. When I get back, we're going to do the Kiwi, the Aussie, dollar index, the peso, the Nordic currencies, which aren't doing a whole lot. But I'll be back in a few moments. Don't go anywhere. Thanks, everybody, for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and I want to welcome you all back. Let's go ahead and go into the Kiwi and the Aussie. So, and then we're going to obviously do we're going to do the dollar index as well. So here's the Kiwi, and you can see the Kiwi really got hit following the rate decision, and the risk to the Kiwi is now, okay, the risk to the Kiwi, and obviously those of you guys that were thinking a cup and handle formation, in the Kiwi, yeah, RBNZ said we're going to have none of that. The 6250 level, very important, because I have to imagine, and just thinking out loud here, there's been a lot of people trying to buy these commodity currencies. I mean, I've acknowledged that they have outperformed, quite a bit recently. I mean, they have. I mean, you look at the Aussie dollar, it's been stabilizing. The Kiwi dollar seems like it's been stabilizing quite a bit. So they've been holding up very well relative to other currencies. So I have to imagine a lot of shorts have been covering, maybe even some people getting long. Well, what the problem with the Kiwi is, it's still very weak. And so if you spent the last 2 weeks consolidating below 64 cents, I'm sure there's been a lot of people like initiating some longs down here saying, okay, it's cheap now, we're going to start getting long. And the problem is if you break through that support. So if you come crashing through the support, you're likely to, obviously forge a whole new area, if you will. So now think about where people are stuck long, and think about the gaps that were created yesterday. All right. Any rally now back up to this previous support, people are going to sell hand over fist. I know I'm just speaking on my own behalf. If we get up to this resistance, I'm a seller, plain and simple. If we can rally back to the spike high after the event, and that previous low that comes in at 63.50, the high in that candle is 63.50. We get back to 63.50, I'm a seller. It's really a no-brainer for me. I'm not saying that I can't lose money, but from a decision risk standpoint, it's a no-brainer. I'm selling. Okay. Now, problem is if we break 62.44, is that what it is? What's the low there? 42. So let's just call it 62.40. We break through that, we're probably going to be seeing 60 cents soon. Okay. That would be my initial gut instinct is, we break through 62 cents. We're testing 60 and maybe even sub 60. Okay. Now I will tell you this, that I will be a buyer of the Kiwi somewhere down here for a bounce. If we can make it down to 57 cents, 58 cents, I'm a buyer down there. Like I said, it may not be the low. Like, we could end up going to 50 cents over the next several months, especially if stocks continue to sell off. But this should be a bounceable trade, right here. You should be able to trade off, off this trend line. Maybe not, The Aussie didn't stop. Right? If you look at the Aussie monthly chart, this has been surprising that we didn't stop here. I mean, maybe we did. I guess we did stop there for like 2 weeks and then broke down again. But, maybe the same happens for the Kiwi too. So here's the Aussie. The Aussie actually looks pretty damn good. Thanks, strong Aussie jobs report. Okay. We're struggling at the 70-70 level. We're there right now. We've had this level marked down for how long? All week. Last 2 weeks. We have an inverted head and shoulder pattern. Say what? Yeah, an inverted head and shoulder pattern. Say what? Yeah, an inverted head and shoulder pattern. Say what? Okay. Huh? Now, am I going to play long? No, I'm not. I'm sorry, I'm not fading the dollar. What? Say what? Yeah, I'm not going to do it. However, if we do get this inverted head and shoulder pattern and we do move up towards 73.50, I'll be happy. What? Yeah, because I'm long the Aussie New Zealand and I'm long the Aussie Canadian. So what? I'll be happy about that if we do that. I don't think I'm going to play the Aussie dollar to the long side. So this morning, what? Yep. We have this resistance here at 71 cents. That'll be pretty important. Now, if we got to figure out where dips are good too, because now you got people stuck short. They're short the Aussie. They're short the Aussie and they're like, oh crap, I'm short the Aussie. That was a really strong jobs report last night. Australia was supposed to only create 5,000 jobs. It created 17,000 jobs. I don't know how that happened, but seasonally adjusted, I guess I should have thought about it, because if I go back to August and I look back the last, 5 years in August, the Australia tends to beat jobs reports in August anyway, so I should have been short in the first place, and oh crap, what did I do? Blah, 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 blah. Okay, so now any dip to 70.10, there's going to be buyers because you got people that are stuck short right now. 70.10. Resistance is at 71, and if we break that, then we have that inverted head and shoulder pattern in play. What? Yeah, we're in a range. We're coming out of a bearish trend. Actually, you know what? Let me take that back. I don't want. I want to tell you it's bearish, but it's not. I mean, it's bearish. It's bearish, but if we break through 71 cents, it turns back to a range. Okay. All right. I'm just gonna leave it at that. Let's go into the dollar index. It's hard to put bullish though, or range yet, because obviously the stock market's under pressure. All right, here is the dollar index. I guess again we'll write down 97, or excuse me, 97, 95.70, 95.70, 96.60, right? Yeah. That's it. What, 95.70? Is that what it is? 95.70. Shoot, I can never remember these numbers. 95.70, 96.60. Okay. Let's take a real quick look at, and I'm going to tell you right now, based on, I don't even have to take a look at the Nordic currencies. Based on what I see, Norwegian krona is down 200 pips. The Swedish krona is up 30. I can guarantee right now nothing's happening in the Swedish krona and the Norwegian krona. I can look at them, but nothing's happened. I can tell you that without even looking at them. They're still range bound, and there's not going to be much to do. Let's take a look at the peso. Same thing with the peso. Still in that range, right? 17 to 16, 1665. Still stuck. Although we are at the, here, let's actually write this down, because 17, and I'll show you the reason why. US dollar Mexican peso. Do you know what the US dollar Mexican peso slips into category wise? It slips into the emerging market category. And then keeping that in mind, I'm going to have to go tell you something. 1702. Let's write down that. 1702. 1702. 1702. Have you guys seen the Turkish lira? Have you guys seen the South African rand? I know I showed them yesterday, but did you see them today? Okay. Well, then I should show you. 1665. This is why we have to watch the peso. Because if you're short the peso, the dollar peso, that means you're long pesos, you have to be very careful, because they do fit into the I am an emerging market currency. So here's the US dollar Turkish lira. Look at this. Boom. Yeah, that's new multi-year, probably all-time highs. Look at the US dollar. What was the other one? South African rand. Look at the daily chart yesterday. We created a hammer. That was a hammer yesterday. Look at us today. I mean, yesterday we were looking at this and we saw that hammer, and look at it today. Boom. Okay. So if you are shorting the US dollar Mexican peso and you see that happening, that's not good, because you're going to get your trade shoved right up your rear end if you keep buying pesos when you got every other emerging market currency getting crushed. Okay. Anyway, all right, guys, there is your bias chart. It is done. And let me go in your comments.